there and welcome. In this video, I'd like to share a story. And this story is titled Africa Rising, a Decade of Mobile Money and Financial Inclusion. Now, this is a story of how a simple technology like mobile money has transformed the financial landscape in Africa. So let's dive right into the story. This is Atamame. Atamame sells oranges in a rural community in Ghana. Now, to you listening, I'd like to ask a question. Imagine Atamame lived between the period of 1985 and 1999 in Ghana. Where do you think she would keep the money she makes from her orange business? I'm sure you'd have thoughts like she could keep it in her house. She could also tie it to her crop. Or she could dig the ground and keep it there safe. Another valid option would be that she could give it to her husband. But I'm sure you would agree with me that there's a problem with each of these options. And the first problem is that these options are not secure. Money stored this way could easily go missing or could get destroyed. Secondly, by storing money this way, Atamame loses access to credit. Because she does not have a digital footprint, no bank would be willing to give her a loan. And this could in turn affect her business's growth because her business is going to be stuck at a lower level. She can only sell as much as her daily earnings will let her, and there's no chance for her to expand this business. And this is where the idea of financial inclusion comes in. According to the World Bank, financial inclusion starts with access to a financial account to be able to make payments, save, access credit, and access insurance. And the target group for financial inclusion is people like Atamame, people who come from low-income households and communities banks have ignored. But having access to an account is just the first step. The bigger question is, why does financial inclusion matter? What difference does it really make? So first off, it contributes to reducing poverty and inequality. It acts as a financial safety net, a savings account that, for instance, Atamame could fall back on when she has an emergency, or a loan to invest in her business. And this keeps her from sliding back into poverty. Then secondly, it promotes job creation and economic growth. If Atamame is able to expand her business, for instance, she will hire more workers. This is creating more jobs and boosting her community's economy. Then finally, financial inclusion also empowers marginalized demographics. For women in rural communities that have been excluded from the formal financial system, financial inclusion is their chance at independence and opportunities. So now let me paint a picture of what the period before mobile money looked like. And I'll call that period an era of exclusion because during this period, financial inclusion was out of the reach of many Africans. The World Bank reveals a staggering statistic. In the early 2010s, only 24% of the sub-Saharan African population had a financial account. Now, if I were to flip this, it would mean that 76% of the population were just like Atamame, without a financial account. But then, something remarkable happened. A simple technology, that is mobile money, came onto the scene. And this ushered in an era of inclusion. So many Africans began to own financial accounts, and the growth was explosive. So now let's look at the big data that demonstrates how explosive this growth was. So according to data from GSMA, as at 2024, the total number of registered mobile money accounts was 1.1 billion. in sub-Saharan Africa. That is more than half of all the mobile money accounts in the world. That is 53%. Then also in terms of the value of these transactions that happen in these accounts, it was up to $1.1 trillion. That's nearly 3/4 of the world's mobile money value passing through Africa. Then finally, on the macro level, mobile money contributed a whopping $190 billion to sub-Saharan Africa's GDP. So the question is, how did mobile money achieve these huge numbers? How did it turn exclusion into inclusion? So let's break that down by looking at what changed. So before mobile money, there was a problem of access. Banks could mainly be found in the cities, away from people like Atamame. But when mobile money came into the game, they did things differently. They made sure that their agents went where the people were, right into the rural communities. Secondly, in terms of cost, to open a bank account, Atamame would have needed a minimum balance, and the fees with transactions would have been also very high. But with a mobile money account, there was no need for minimum balance, and charges were very affordable. Also, in terms of documentation, Atamame would have needed to fill multiple bank forms and provided documents, such as a proof of address, to be able to have a financial account at a bank. But with mobile money, all Atamame needs is an ID card to create an account. Then, finally, in terms of trust, banks were already far away, so rural folk found it hard to trust these institutions with their money. But with mobile money, trust grew because the agents were people that the rural folk already knew. So your hairdresser by day could be your mobile money agent by night. That closeness made it easier to trust and use mobile money accounts. So as powerful as this transformation has been, the story of mobile money is still unfolding. And the question now is, what does the future look like? First off, advances are being made in digital credit scoring. So for the first time, people like Atamame are building a digital footprint that can open doors for loans. Then, also in the area of interoperability, Ghana has proven to be leading. We are the only country that has a fully linked domestic payment system. So an MTN mobile money user can easily send money to a Telecel mobile money user, and one could easily transfer money from your bank account to your mobile money account. Also, AI. What is AI doing in the mobile money space? AI is helping to catch fraud before it affects the vulnerable like Atamame, who are more likely to fall for mobile money scams. And finally, it is estimated that by 2033, the mobile money market in Africa would hit $3.66 billion. And this shows that mobile money is not slowing down just yet. It is continually scaling up and deepening its position in the African financial system. So then, I'm inching to the close of my story. And here again, we see Atamame. This time, she is clad in a golden cloth. And this is because of the new financial reality that mobile money has offered her. So today, Atamame doesn't just sell oranges. She runs a growing business. She receives payments instantly on her mobile money account. She saves securely, pays her children's school fees with ease, and even protects her business with a microinsurance product. Every transaction here is building her credit history, and this is going to open doors to bigger loans in the future for her business. So, in summary, this is the story that our data has told us. This has been a story of growth, a story of access, and a story of inclusion. And I'm sure that now you would agree with me that mobile money is indeed sparking a financial revolution that is reshaping millions of lives across Africa. This is the close of my story. Thank you for listening and see you in the next one.